Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts and going over some options data. So I'm doing a stream here tonight on Sunday evening. It is now 10:38 Eastern in the PM. And yeah, I've been wanting to just kind of go over some of the options data, go over the charts of either stocks, positions that I hold, don't hold, did hold, curious about. And, I was just going to do it by myself. But in all honesty, I just don't end up focusing on that. And so, yeah, I thought, I might as well just force myself to go through all of this stuff by doing it live. So hopefully this is helpful for you guys. I will start out with a few options stocks that seem pretty interesting to me, and then just also kind of could be comparing with other people's analysis on X, and yeah. So I hope this is helpful for you guys. It's a Sunday night. And yeah, I will be going over, let's see, all the tickers that are listed here. I'll actually have Ed step out of the way so I can just read them. But at some point, not at the start, not going over these in alphabetical order, but we'll be going over AMC, BlackBerry, BigBear AI, Webull, GameStop, Intel, Marathon Digital, Nio, Oklo, Peloton. I'm excited about that one. And let's see, QuantumScape, SoundHound, and Unity Software. I will also probably be adding some others up here. Just kind of, want to explore the bulk data. And so with that list of tickers, if you guys are watching this after the fact, you could just kind of skip to the ticker of interest and yeah, just see what I have to say about that. And if this isn't helpful for you guys, I'm sorry. I'm just trying to add value for the channel, but also for myself. And I just want to get better at, diving into the data and then setting up trades that, I have a lot of conviction in. And I find that the options data really helps me with that conviction. And so on the note of all of that, I do see that maybe one person is joining. I will leave the chat open for myself to see, but if people do show up and this gets a little crowded, I might hide that for myself just so I can focus on the ticker that I'm doing. And yeah, and if you guys are watching this after the fact, let me know that you did enjoy it because I'd be happy to do this again. But if this doesn't really get that much traction, I might just do it so I can listen to some music. So I'd be doing that privately because I get like copyright strikes if I was playing music. But anyways, I got a little beverage here. I was going to make the traditional old-fashioned, but I ran out of bourbon. So I've got one can here. But I also don't want this to be too loud for you guys. That was probably a big pop, sorry. I also have a bowl of some popcorn here. If you guys care, if you're interested, I got this stuff. It's the cinnamon butter AMC popcorn. I expected it to be kind of gross. In all honesty, I do have a sweet tooth, but I expected this to be gross. It's really good. You don't add anything to it. Just throw it in the microwave, and you get some really tasty popcorn. And also, since I am, mentioning other things, I do also want to mention that I have been reading this book. It's probably backwards for you guys, but the Wyckoff methodology in depth by Ruben Villahermosa Chavez. It's the second edition, How to Trade Financial Markets Logically. And so I've been enjoying that. I like technical reading. It's a technical book, so it's fun. But anyways, I'm rambling a bunch. Let's dive into the charts. One I'm really excited to look over is BigBear AI. This is one that I did hold, but I did sell for some profit, exited, and let's see. Could I look over? Yes, I can definitely look over at AMD's. What's up, Ricardo? How's it going? So I'll do that, but I did want to just start with three tickers, maybe four, and then I'll get into AMD. So if you got like 10 minutes, and then I can go over AMD if that's cool with you. But so the first one that I wanted to go over is actually not BigBear AI. I wanted to go over some of the GameStop contracts specifically for myself, for my own interest. I wanted to go over the $80 call That expires 25 days from now on June 20th. And the reason why I want to go over this is because I've been holding a number of them. I did recently exit the majority of my position. I'm still holding shares, but I only have one contract left, one of these contracts. And my average was 70 cents. And in all honesty, I was trimming the past few days, or maybe the past week or so, just because I was concerned that this was getting close to expiration and that maybe we would not see moves, at least not up to $80 a share. And so I don't really feel like GameStop will be at $80 a share on June 20th. And so that's why I was trimming at a little bit of a loss, and then I did sell the majority of my contracts at break even and or higher. And so the reason why I was trimming is, because I don't necessarily think GameStop's going to be at 80. And last month, or I guess earlier this month in May, I did have some Nio contracts expire worthless, and I wasn't even to sell them to get $1 per contract. So that would be like 1 cent per contract times 100 shares per contract is $1. And so I just have a number of contracts that are expiring June 20th. Actually, I only have like maybe 2 or 3, I think, between AMC, GameStop, and Nio. And Unity Software as well. But yeah, I mean, I just have concerns that GameStop could be below 80. Maybe it spikes to above 80 but pulls back. So I'm sure I'm missing out on some gains, as like the high on Friday, the 23rd, was 95 cents. But, I was getting out. I was trimming one contract at a time, and then I think I had like 20 or so of them, and I trimmed the majority at 70 cents, so at break even, and then I did trim the remainder, the odd, maybe 6 or so, at 84, because that's 14%, or sorry, it's 20%, 14 cents more, $14 more per contract. So I mean, I feel like GameStop is going to continue running. There are a number of reasons for that. I do think we might see some pullbacks, and then I might see, this contract is pulling back below 70. That was my average, but I've fully exited my position. Maybe I want to buy back when it's below 70, but I think that would just be like a really bad idea, because it's only 25 days to expiration, and $80 is pretty far out of the money considering that GameStop closed above 33 on Friday. So, it's got a more than 2x to get up to that strike. And so what I've kind of realized is, I should just be kind of focusing more on shares, and that when the stock does pull back, I should take advantage of that, even though I could have been buying more aggressively at like 20 or whatever it was at recently. I wasn't able to do that because I had a bunch of money locked up in this contract. Now, since I've sold a majority of those, I have some cash. And let's see. And so just looking at the data over here, maybe I'll expand this one. And let's see. So for this is the net call and put premium. So the net call premium's in green, net put premium's in red. Then we got the volume down here, and the stock price going up in yellow. And so what we saw on Friday is that net call premium increased by 16.5, nearly 16.5, 16.46 to be precise. Net call premium increased by nearly $16.5 million, whereas net put premium only actually decreased by $20,000. So this just seems like, massively bullish. If we do look back, like let's say just to start the past 3 days, we can see that, net call premium on Thursday went up 13.76 million, and then on Wednesday it actually came down by about $1.2 million. So that was, in all honesty, a really nice dip buy. It looks like price on that day, it was around $28, so sub 30. So that was really like a nice dip buying opportunity, if you ask me. If we go back the past 7 days, we can see that, we've just really started to see, the tens, almost tens, but more than $10 million in net premium these 2 days. And if we go back the past 30 days, just to throw it all up there, yeah, I mean, we see a lot of money going into these calls. And that's together 13.7 plus, what was it, 16.5. That's nearly $30 million going long GameStop the past couple of days. I feel like they're going to have an announcement soon about Bitcoin. I think that this is going to continue higher, but considering the contract that I was interested in, or that I am still holding, but not really that heavy, and with these other ones, actually, some of these are expired, so maybe I want to just close those out. Let's see. All right, and so another one that's perhaps a little bit safer bet is the $20 call that expires in June, 25 days from now. But that's actually, the average was $12.25, so that represents over $1,200 per contract. So that's a lot of money to be risking, but the stock price is well above 20, so that would be closing in the money, I imagine. But the one that like I said, was holding, or am holding, still just one contract, is the $80 strike. And then just thinking about that, and then looking over at the data over here. So I'm just going to type in GameStop GME again, just to make sure it refreshed. And so, yeah, for the expiration on last Friday on the 23rd, max pain was about $28.50. And we closed well above that. GameStop here, I'll just flip over to Webull over here, and I'm just going to pull up Stonks. GameStop, this has, closed above 33. That's what I wanted to say. And 28.90, I've got that yellow line there. That represents, I guess, the opening price from February 14th, Valentine's Day. Tested that over here, got rejected. Now we're above it, so I think if we pull back, that could be acting as support, and that would still be above max pains, 28.90. Looking over at the max pains, last Friday it was 28.50, so that yellow line still above this max pain. And then we got 27.50, 27.27, 24 for June 20th. So all I have to say is I think that the stock price is going to be a lot higher than 24, at least leading up to June 20th. Maybe it gets pulled back down to around 24 by then. So good to, manage that risk. And also, while I see it, I should note that Unusual Whales does have a memorial sale going on until May 28th. So a few more days, 20% off options flow upgrades. And I believe 15% for just getting a subscription. I like it a lot. I don't utilize it as much as I should, but that's just because of work and projects, other things that I'm doing. I just can't dive into it that much. That's kind of why I'm recording this. But yeah, I mean, we can see all of these max pains much lower than where the stock's currently trading at. And so for me, what I've decided to do is, if it pulls back to 32, I'll add a little bit. Pulls back to 31, I'll add a little bit more. 30, same type of deal. And then if it comes back to 29, I'd kind of evaluate what's going on with the options data. If it still reflects that there is, bullish sentiment going on, that there's still bullish moves expected, I'd probably add more heavily around 29, risking more, of course, down there. My average is currently around Roaring Kitty's average, which is, I believe, 23.41, unless he has been adding. But yeah, I mean, I think that this could be going higher. I just think at least the options contract that I was looking at in GameStop generally does have pretty high contracts, expensive contracts. So yeah, I mean, I'm just going to be looking for this as far as shares go on any sort of pullback. Let's see, just get this drawing tool. If it does something like this, I would be excited to be, buying that dip around 29 bucks. And since we have gone higher than that retracement over there, let's also just see. This is most definitely going to change, but just looking at that high, 33.21, and then that low was 20.73, as we can see here. And yeah, pulling back to around the 382 would be around 2844. Maybe that would be acting as some support, and I'm actually just going to make that white so it stands out a little bit. But yeah, I feel really good about GameStop, but one that I've actually been really intrigued by, and then after this, I'll go over AMD for you, Ricardo. Sorry if I'm holding you up. But that one is actually not on this list here because I don't hold it anymore. Some form of position, that's the list that we're looking at there. But this is one that I was previously holding, was holding a contract. I believe I took profits around the spike here, maybe not exactly. And then I was looking for, pulling back to around 350. That did happen, but we kind of moved up and then pulling back. And it looks like BigBear AI is respecting this uptrending line. And, so this chart to me looks good, but it also, like, I'm a little bit concerned that it could be breaking this trend line. But what we can see here is, maybe there's a little bit, it's not this horizontal line here, but maybe there's a little bit of an ugly head and shoulders pattern. Let's see, I'm just going to draw it. Actually, no, that would not work. Yeah, so I guess it would be more of like a cup and handle, maybe a diagonal line here, up to here, rejected, and then pulling back. So that looks intriguing to me. Also, there's some options data that looks pretty interesting. So maybe I'll look at that. Well, actually, no. What I'll do is I'm going to pull this up on X. I am going to look up Mr. Chart Norris. And let's see. I want to just search his page for BigBear AI. And so he's not the person who put it on my radar. I did establish a small position a little while ago. Sold it, got out. But he said, give us 350 at 370. This was from May 12th. We did get that. I'm going to like that. And so it's just this downside up is what he's expecting. And this is something that I find compelling. I've already liked it. BigBear AI Daily Chart Update Point 2. Descending channel breakout and successfully forming the right shoulder of the inverse head and shoulder testing the neckline. And what time frame is he looking at there? This is on the daily. That's kind of interesting. Is this? This is from May 14th. So May 14th, let's look back in time at May 14th. That was like over here. And so that was like, yeah, we got this shoulder over here. Maybe it's an ugly shoulder, coming over to here. Ugly double shoulder, head, right shoulder, bump up, pull back. And now it's kind of testing some levels at 365 in the after hours, but closed on Friday at 364. And so, yeah, that's what we're looking at there. So just a continuation of that. And so, I had initially started a position in BigBear AI a little too early. I got into it before this gap down. That has since been filled. As you can see, it's a solid blue line. And, I just got my average down in my call contract, in my shares. But then when it was over here pulling back to 350, I was just kind of like, I don't want to be spread too thin. I'm looking at too many stocks. I'm just going to exit basically at break even as far as the shares go. I did take profits on the contract. But then looking at this, seeing Mr. Chart Norris's posts and looking over at, let's see, some options data, there is some stuff that kind of got me intrigued about it. So looking at BigBear AI, the one that I was holding and would probably consider getting back into, maybe around 45, maybe higher, maybe 50. I'm not sure. But yeah, this is the $10 call that expires in January. So 235 days to expiration. And so while the data here may not look that great for this contract specifically, if we look at all of the contracts in general, what we can see in the net call premium here in green is that it went up by $617,000 on Friday, which may not seem like that much, especially when compared to GameStop. But if we go back, I'm just going to do it quickly, 30 days, we can see that there have been some pretty big spikes, much bigger than what we saw on Friday. And so on Wednesday, we saw the day ending. Actually, let's just go back. So I guess I'll go back to this and then I'll just zoom in over the past week or so. But so on April 25th, we saw net call premium increase of about $900,000. Then over here on May 13th, went up by 1.5 million, and then it's just kind of come down a little bit. And then over here, it ended up about $1.6 million. So just looking over the past 7 days, we can see this big spike in that net call premium. And, that call premium held up even as the stock price pulled back. That still held there, although people did, I guess, sell a little bit here. But yeah, this looks intriguing to me, even though it's, only $600,000. This is a and some change dollar stock, a $3 and some change stock, probably a better way to phrase that. And so, yeah, I wouldn't expect the premium to be that huge. So I'd have to say from Mr. Chart Norris's analysis, from my analysis over here, kind of having a confluence of analysts, and then also looking at the options data, BigBear AI is looking pretty good in my view. So I feel like this could be taking off. And let's see, just looking over at his post over here. Let's see. Give us 350 to 370. I feel like, when will we send it now? I still don't get it. Let's see. And I guess, let's see. Yeah, so this chart over here. Yeah, if this plays out, this head and shoulders pattern, that would suggest a measured move from that head, top of the head to the neckline. That would be up to around $5. So, yeah, I think that this could be moving, and I think that there could be a nice swing around these contracts. So I'm kind of intrigued by that, but let's also look over at the max pain just out of curiosity. And so it was 350 on Friday, whereas it closed above that. So that's good, but it's not like massively higher. This upcoming Friday, 350 again, then $3. So because that max pain's either staying flat or going lower, and this is looking actually pretty good, it's quite possible that we do see maybe like a gamma squeeze or a gamma ramp. So this is one like, oh my gosh, I knew I was going to spill something. I almost spilled the popcorn. That's a sign I got to eat some. I'm going to set it on the floor. I got too much stuff on my desk. But yeah, I'm intrigued by this one. And this contract, $10, yep, seems a little bit ambitious being sub $4, but 230 days to expiration. So those contracts are a little bit cheaper and, than getting one that's like a $5 strike. And given that they're further out into the future, it's like I could have it with a strike of like $5 that expires a month from now. That would be cheaper probably than one that expires in January. But so to kind of balance that out, I've moved the strike up to, actually, no, this would all just make it more expensive. No, yeah, moving the strike up would make it less expensive because it's less likely to get there, and having more time, that makes it more expensive though, because it's, there's more possibility for it to go up. And so I'm intrigued by that contract, but I don't hold it, and I don't hold any of this stock. But yeah, just wanted to mention that. And then there are a couple others that I'll go over, most notably Webull and Peloton. Very excited about those, but I will pull up Ricardo's request. Sorry to keep you waiting. Hopefully you're still here with me. But yeah, I'll just pull up AMD over here, look at the chart, and then I'll dive into the data. And for me, all I have to say is a stock like AMD, contracts are probably going to be too pricey for me. But what we can see on the chart here is that it closed above $110 on Friday. And I have not looked at this chart in a while. As you can see, both of the doodles that I drew here did not play out, but the pink one kind of did. I mean, actually, the pink one did pretty well. It came down a little bit faster than I expected, and it has bounced. But is it going to get up to, let's see, 160? Ricardo's still here. Cool. Yeah, so, I mean, what I might do, I think I enjoyed leaving the doodles up there because then it's something for me to come back to. I'm usually wrong with them because it's either with price or with time I'm wrong. And so this pink one, so far, I seem to be right as far as it coming down here and bouncing, but not all the way up to 160. And the level of resistance over here, that purple line, would be around like 155. But I'm just going to delete those just so we don't have too much clutter here. And the thing that I actually find really interesting about this is this trend channel because it fits to the data. I believe it's 1 standard deviation for the data in this range. So I believe the way that will be calculated is, let's see. Yeah, actually, I'm not exactly sure how that would be calculated, but this is just the midpoint of that, and it's plus or minus 1 standard deviation of the variability within this time frame. And what looks really cool to me is it looks like it broke out of that trend channel, has pulled back and retested the top of it, which, that's fitted to the data. That's not something I drew up there. It's just the only thing that's arbitrary about it is the time frame selected going back to October 9th. But yeah, that looks like a breakout and a retest, so that looks really good. Let's see. I was hoping that this would be like the tops over here, but we did go lower than that. But it does look like this little plateau here, and that was also support over here. That does seem to be where the stock price came down to on Friday, hitting a low on Friday of 107.67 and then bouncing from that. So I think that looks pretty good. And then just to, I guess, illustrate it perhaps a little bit better, let's see, from over here, from the lows over here. So I'll just do like a horizontal line, and I'm just going to do it from the open on February 5th, which was 107.61. So we see that, and that I should note that did act as, support over here, bounced from that level, came back, tested it again, bounced again before breaking below it. And we can see that it was resistance briefly for, let's see, a few days over here. So seems like it's kind of a notable level. And we gapped above it, and now we're back to that level. So I think that it could potentially be finding some support here. But let's look over at the options data. And the way that I might do that, I'm just going to pull up the flow over here. This was a contract that I was looking at. I'm actually just going to clear all of this so we can start fresh. And I will look up AMD. And let's see. I'm just going to adjust the premium here. Ed's no longer with me, I guess. I forgot to invite him back. I might bring him back now, though. But yeah, I've got to scroll. So this is above his head. So you can see that premium box there. I'm just going to type in 100,000 as a minimum. There were a good amount of contracts traded on Friday for $100,000, but let's filter it down to $1 million just to get a little bit less, fewer results. Still a good amount of them. We can see that premium here, millions of dollars. And these all seem to be puts, so that's kind of interesting. But the flags are that this data is all the floor, that it's neutral tags. Excuse me, I should say. The side was none. It was not ask or bid, so it's kind of tough to tell whether or not these puts are, going long or short. But anyways, I'm just going to click on this one contract, because the data that I actually want to look at is just this data over here, the general AMD premium data. So we can see on Friday, that the net call premium in green here came down below this horizontal line here and closed the day negative. So net call premium came down by about $2.3 million, but net put premium also came down, and that was down about $3.5 million. So that red line here, that was also negative, more so than the calls. And if we look at the bear bull slider, this is actually pretty interesting. It's about 40 bullish, about 39 million bearish, and then just the majority of that being neutral. So that's pretty odd to see. But what we can look at, not just this one day, what we can see, and I guess, maybe I could look at this one drop here. So net call premium was at about 23,000, and then it dropped down to about 2.42 million. So yeah, what I might do is, I'm actually surprised that that doesn't show up in the data over here. So, okay, so that's the flow. That's what I want to look at. I'm just going to escape. So all this puts, I'm just going to adjust this premium then to be above 500,000 and see if there are any calls that stand out. Nope, it's all puts. That's kind of odd. So I'll just adjust that to 10,000. And let's see, what was that time that I wanted to see that drop at? That was around noon, around 12:02 p.m. And so let's see, around noon, let's just scroll to that time. So I'm going to show 250 results here. So we hopefully have them all for the day. And so yeah, around noon, calls. This was a $100 strike call at around 2. There was also, this would be, oh crap, this over here. So this drop seemed to have occurred at like 12:03. So just after 12. So what am I looking at? So this one that's 110, which is bullish because it was on the ask side. So that suggests that it's bullish. That was before noon. So the one that we were looking at where we saw that big drop was going to be these calls, which were on the bid side. So that suggests bearish, as you can see over here. And these are all, $100,000. But we did see an alert here with that. All of these were at the exact same time, 12:04:24. And so this trade was part of a flow alert. Click for the full context of that. And so it looks like this was a total premium of about $2.4 million. We can see it up there. And if we look at the chart over here, we can see that drop from, 20,000, 23,000 down to around 2.4 million negative. So that does make sense. It does seem like it was that one contract, nearly $4 million, looking like it's all bearish. And so this is all the $100 call that expires in June, so less than a month from now. These were all sold. And so I'm actually really intrigued. This, I think, is going to be a nice little lesson that we can look at. Let's look back in time. So we have $2.4 million there. If we go back in time, maybe we can see when that was bought, if that was sold. So, no, I mean, this is like 2.6 million candle premium for the entire day, I guess. So there's nothing really that clean here to suggest exactly when it was bought. Could have been bought back here when price was up here, sold here, or sorry, that's premium, yeah, so that would have been sold at a loss, but it also could have been bought into here and then sold at a gain there. So yeah, I am not sure. We'll have to see. It will be good to check on Monday. I'm going to get it out of the way. It will be good to check, on Tuesday, if that open interest for that contract is still around 32 2.2 contracts open. There was about 2.2 thousand contracts traded on Friday, and we can see that we can't see if those were bought or sold. I imagine sold, so I would imagine that the open interest would be down to around 30,000, not 32,000. But if it goes up to like 34,000, that means that there was actually buying. And then that would be bullish. But just looking at this data, it suggests that it's more negative. So good to be cautious with that. And, maybe exercising some caution. Maybe I'm wrong about 107.61, 108, 107 potentially acting as support. Maybe what we want to do is do a Fibonacci retracement just to see some levels that it could be pulling down to. So, while the 108 seems like a nice level, let's see if that corresponds with the 382, which I feel like is kind of, a risky one because it could definitely go lower. That's around 104 or 105. So maybe it dips down to there. But if not, let's see, it could be coming down to like 99.50 or right around $100. Also kind of a psychological level. And also, we can see this consolidation over here. That line kind of corresponds with that. So maybe there'd be support there, but maybe a dip a little bit lower. And, we can also see that there was some resistance over here around $97. So maybe it comes down to sub 100. Maybe it finds this 618 as support around $94. If not, the 786 is around $86. So yeah, based on the options data, I would expect this to pull back a little bit more. And so maybe like $100 would be a nice level to keep an eye on. But just because it has a 50% pullback doesn't mean that is going to be the bottom. It could be coming down lower, like I said, to 94 or 86. I feel like I'd be surprised by 86 just because between the 50% and 618 here, we do have, like I mentioned, this kind of consolidation over here, the resistance over here. So I feel like 94 would be, or maybe 95, round that up in case it doesn't get to that exact level. Maybe that is where that could be going. And to note, possibly getting to a level, but not quite. We did have some gaps down here. We still do have some gaps down here around 75.15, 70.07. And, so those gaps did not get filled. Maybe those gaps never get filled and there's just like a little bit of a tease. So that top gap there is at 75.15 and the low on April 8th was 76.48. And it didn't quite get there. So maybe it doesn't quite get to some of these levels that I've talked about. But given the options data and that this hasn't really pulled back that much, I think it could be coming down to 100. But I also think that legitimately it could be finding support right around 107, 108. So I'd actually just keep an eye on that level. If it starts to close below 107, then I think that, right around 100 is the next level to be keeping an eye on. There is a gap here, but, I'm not going to draw that up. So yeah, Ricardo, hopefully that was helpful for you. For me personally, I'm not in AMD, and that's one just as far as the contracts go and stuff. They're just going to be too expensive, and I haven't really been following the stock enough to know about it. But actually, hey, kind of cool to take a step back here. I had drawn this head and shoulders pattern suggesting where price could be going, and the 100% extension, so from this Fibonacci extension there, was at $68. We did not, 68. We came down to 76.48, so not quite getting there. But if we do a measurement from the top of the head here, the tippy top to that neckline, let's see, actually, I'm not going to do it to the tippy top because I'd say, maybe that's just a blow off top. Let's not count that. So just going from that like consolidation highs to the bit there. Yeah, that'd be suggesting it's going a lot lower. So I don't really think that's happening. But yeah, I'd look for, if it starts to close below 107, I'd look for dip buy opportunities around 100, maybe 94. But I have no idea. I don't follow it. So take that one with a grain of salt, but hopefully it is helpful. And I guess I should note, well, this is BigBear AI, but yeah. AMD, what are the max pains for it? 111, 110, and then it starts to go down some. And so 111 was on Friday the 23rd. We closed below it. AMD closed below it. So that's not showing so much strength that with this bounce, it wasn't able to get above max pain. So yeah, I mean, I could see this probably coming down to 100 or so. But yeah, let's, I'm going to just have a sip and have some more popcorn, and then I'll go over some more of them on this list. And I might actually note the order that I go in them, so I can just add that to the description, and I'll post this on X so people can access it as well. So initially I went over GameStop, then I went over BigBear AI, then I went over AMD, and now let's see, I'm going to go over Webull. This one I don't think, unfortunately, has the best options data, but I think that there's some neat stuff in the chart, but because there's not much in the options data, I don't know how much conviction I have in it. So I'm going to eat some more of this popcorn. I gotta take more small popcorn breaks. Okay, so looking over at the Webull chart, and then I'll go over to some posts on X, and then I will go over the options data. But so I was initially intrigued by Webull because I am showing it to you guys here. The exchange that I use for stocks is Webull, or at least that's the primary one that I use. They recently went public, I believe, and when they IPO'd or DPO'd, whatever it was, stock went up to nearly $80. I'm not going to chase it. There's not enough data on the chart. But then when it was coming down to this yellow line, I was thinking, well, maybe are there some levels there that I could be paying attention to? And so I noticed, looking back, that the open here on March 28th, I believe it was not publicly listed at this time, but the high here was 1340. So that's the yellow line. So I started to think, hey, maybe it's going to bounce from that level. And it did. It went up 30 to nearly 40% from that level. And so I started to pay more attention to it, although I did not establish a position. I just kind of wanted to see what happened. And then, of course, when it came down, we left this gap to the upside, and we broke below that yellow line. That's when I entered a small trade, got some shares, and then I kind of laid out this plan of, my average being right around here. I believe my average has gone down because I sold some at a loss because my stop loss was hit here at 11.98. I actually got stopped out half of my shares at 11.95. That was on this day on May 19th, hit a low of 11.61. And my plan, my strategy with Webull was that if it dips down to, sub 12 bucks, I'm going to have a stop loss there. And then I'll buy back those shares at 11.10. And the reason why I wanted to do 11.10 is because not necessarily corresponding with the low from April 3rd, which was at a price of 11.10, but really just corresponding with kind of like the consolidation lows here. So not going with the absolute low over here, which was 10.39, not going with this low over here, which was 10.94. But just thinking that, 1, 2, 3, 4, 5, 6, 7, 8, there have been a number of days that, Webull was traded around that level, but it seems to have found some sort of support around there. So I just started to think that, if I get stopped out of half of my position, I could just buy back those shares at 11.10, and then wherever it goes to on the upside, I'd make back what I lost. So I've basically right now I've lost $20 effectively. It is below my average now. I think I'm at 1242, but I think it's 1242. But yeah, let's see what this alert is at. $16. I believe my average prior to the stop loss and then actually buying back at 11.95. I could have bought a little bit lower, but I bought back at 11.95. Prior to that, 20% swing for me would have been, I believe, 15.24. And so I just have a limit sell placed at 15.24 for half of the shares that I have now. And then, I'd see if it goes up to fill this gap at 16.41. Maybe I just completely exit. If it goes up, maybe it goes, back to 80 or 50 or something. And so, yeah, just kind of having fun with that. But if it does come down to 11.10, I'd add more, and maybe I'd regret that. Maybe I'd become too overexposed, and this would then be a long hold for me. And so I'm a little bit concerned about that, looking at the options data, but looking over at Mr. Chart Norris's charts of bull gives me a little bit of confidence. Things I would not necessarily notice because I don't usually veer too far away from the daily time frame candles. So he has this posted on May 15th, the bull weekly candles. So you see two hammer candles and then a star. I'm not sure if it's a shooting star or a morning star, something like that. And what if it plays out? And so with this, he's just suggesting that from this upside move, not getting back to 80, but that there could be like this, cup. And so I kind of like that, but this is on the weekly time frame. I would rather not be holding for, 1, 2, 3, 4 more weeks, somewhere like that, a month. There's opportunity cost in holding something like that. So I'd rather have something that has a little bit more volatility. But he has posted some other stuff. I believe this is on the 4-hour time frame for those shitting their pants. And I actually responded to this comments. This is on the, let's see, 1 day. This is on the daily. And so he sees this downtrend here with a target to $18, somewhere around there. But there's then this moving average here around 14. And so what he sees with that is this high was from the 23rd of April, I guess. So let's see, the 23rd of April, so right here. And so it's possible he's looking at this on the log scale. I'm looking at this on the linear. But, yep, so that's from like the pivot high here to the pivot high here. We actually got that lined up pretty nicely this day, the candle here, and this candle here with this one. So that's kind of neat that I just happen to have those lined up. But yeah, let's just do a ray so I get these two pivot points very precisely there. Lock that in place, assuming that they're correct. And so we see this little bit of a breakout in a retest. And that's exactly what he's showing, so that's cool. I'm able to doodle up what he's got doodled. And that would be suggesting, so if I have, limit sell at 15.24 or whatever it is, not financial advice, I have no idea. I could definitely lose money on this. But that, well, there's a moving average here. Maybe that's going to be resistance. But getting back up to this rectangle, that's around $18. So, I'd be in the clear. I'd be good. And that is effectively what I have drawn up here as far as the not the risk side. I got stopped out there, but I sold half my position. And then if I were to hold the other half without having bought back down here, so now I do have a whole position again, and then I were just to swing up to here, that's around 18 bucks. And so based on my risk to reward thesis, which I've kind of botched because I did sell here and then I bought back right away. That's because we didn't go down to 11.10. If we do go down to 11.10, because I sold some of those GameStop calls, I got some cash on the side, I could more comfortably add down there without trimming more. Maybe I reevaluate down there. But yeah, I mean, I think that this looks good in that sense from the chart perspective. But if we look over at the contracts, this doesn't really look that exciting to me. And so the one that I guess I've been eyeing is a $30 call that expires in January, so 235 days from now. Why would I pick 30? Probably because there's this orange line here at 24.23. Just like, so there's some consolidation there. So, getting up to around 30, I could see that happening, potentially doubling in price, getting up to that orange line. That volatility would cause the premium of this contract to go up. So I'm kind of intrigued by that. To buy one of these contracts, it looks like it's a low of 90 cents on Friday to a high of $1.25, average being $1, which translates to $100 per contract because each contract represents 100 shares. But if I do expand the data over here, just so we can see this overview, let's see, I'm just going to close these other tabs. What we can see is that the net call premium came down in green here, down by about $1.1 million. So that doesn't seem that good. Whereas net put premium went up by about $880,000, so nearly $1 million. So both of those things suggest bearish. We do see that the bear bull slider is more on the bearish side. So that makes me feel a little bit less confident in this play. If I go back the past 7 days, we can see, puts going pretty high, calls not going as high. So on Wednesday of last week, so the 21st, net put premium increased by about $3.5 million, whereas net call premium increased by only $352,000. So that makes me a little bit concerned. If I go back 30 days, don't have options data back here. But what we can see is, it's been a lot of ups and downs for calls and puts. It's not really a clear trend or a clear pattern. So that makes me a little bit concerned with Webull. So, I'm kind of wondering if I want to pivot out of that and into BigBear AI, just because I feel like that's just a much cleaner, not only chart, but also the options data just looks a little bit better to me. But yeah, Benjamin, what's up? What do I think about Mara? Happy to go over it. I'm gonna note it in my notepad and I will go over it, but I'm gonna have some more popcorn and another sip. Otherwise, I'm not, it's like basically I was like, I want to make popcorn, relax, watch a movie, but I should do some like diving into these charts. I'll combine it, I'll stream. And so, let's talk about Mara. I will be posting or going over some posts on X with this one. There's some stuff that stood out to me. So Marathon Digital, this is going to correlate pretty heavily, or at least I've kind of noticed there's a lag with it following Bitcoin price action. So I'll look over the Bitcoin chart as well. But with Mara, I was thinking that, upside consolidation, bull flag, upside consolidation, bull flag, upside consolidation, bull flag. Also, that corresponded with this trend line going back to the lows from 2022 as well as the lows from 2023 over here. We kind of broken below it and then formed this inverse head and shoulders pattern. What's the most there isn't anything more bearish than a failed bullish pattern and vice versa. So maybe this is pretty bearish. I'm not too concerned about it though. My thesis for Bitcoin for this year, which I do go over every Saturday for Crypto Corner, Sat Stacker, is really based on Ethereum, but basically that this is a 4-year cycle. Those that are oversold will go higher. And Marathon Digital closing at 1473. We can see that is above this 618 here, this Fibonacci level. I actually threw this up here for myself. I do have a very small share position. I think I actually hold more contracts than shares, or one contract, but multiple of it. And yeah, I'll go over that in a little bit. But as far as my share position, which like I said is pretty small, I believe I have a dip buy order for 1439, just corresponding with the 618. I might be mistaken about that. I'm not exactly sure like what my order is, but I imagine I drew this up here because I'll just tell you, I guess. But it's probably just one share, because I'm not trying to go too crazy. But let's see. Mara, yeah, 1439. So just corresponding with that 618. Maybe it gets hit, maybe it doesn't. And also maybe I can throw up here just, for entertainment purposes, I'll just throw up that 50% level. That was at 1493, having closed below that. That's kind of why I removed it, just to clean up the chart there. And yeah, I mean, this could just be a dip buy opportunity before it launches, gets back above there. I think that's probably going to relate to what's going on with Bitcoin. So maybe I'll pull up that chart, which from Crypto Corner Sat Stacker, I talked about how I could see this pulling back to between these levels around 106 down to 104. And so it's a very small dip buy, but I do have a dip buy order at 105, thinking if it pulls back below here, maybe I don't want to be greedy and have it get all the way down to like 104, but maybe it breaks 106. Maybe 105 is me being greedy, wanting to get the dip, and it doesn't get filled, but price does go to 105. The order doesn't get filled. That's fine. If it bounces, that's great. I'm happy. But yeah, I mean, so I feel like this could be pulling back, but it does look like, so this is data here for Monday, the 26th, the futures, or it's not really the futures, it's just GMT, whereas, I'm in the US, so time zone's a little bit different. Yeah, so on the 26th, Bitcoin is trading just shy of $110,000. Looks like it hit a high of $109,905.22. So right around 110, kind of makes sense that being like a psychological level. A 100 at 10, that could be some resistance. But it is up, so when I did Crypto Corner Sat Stacker, that was on Saturday. So it was only this candle that was being formed. It wasn't even completed. And so I was thinking that this could be pulling back. Maybe I'm wrong. Maybe I'm right. I don't know. But I wouldn't be surprised if Bitcoin did come down a little bit lower. Tough to judge over the weekends because Bitcoin does have more money, when the markets open. So that is something to be thinking about. But I think that this could be pulling back some. And then I'm just going to look up the, let's see. Oh, I thought this was Max Payne. So I'm just going to go over to here. Options change, Greeks right there. And I'm going to look up Mara to see what the Max Payne was for Friday, just out of curiosity. So $15. We did close below that, so that's not so great. $15 the next couple weeks, then $14.50 on the 13th, $15 for the monthly contract, and so on there. And so if we do look at, let's see, the data over here, I'll look at this contract in a second. I just wanted to pull up, I'll just share what I commented on this. It wasn't me. When you poop your pants. That made me crack up. I was at work. I saw this for those shitting their pants because I had posted about Bull a little bit, commenting on some of his stuff. And I'm sure people are freaking out. So I just said, it wasn't me. He said he believes me. But that was just making me laugh. But yeah, let's get out of this and go to, let's look up volatility, Talati Tapan. Not sure how to pronounce his name. But from what he's posting, there's something that I commented on Mara. So he posted this on the 24th. And let's actually just, I'm going to go to latest just to see what he posted latest on. Okay. So hey, keyboard warrior. I guess I follow those people, so that's why I can see this. I'm not sure. Never said they were correlated. Far from it, actually. Bitcoin went from 109 to 74 and then back to 112. Meanwhile, while Mara from 30 to 9 and then barely moved to 17. Turtle speed. It's definitely lagging, to say the least. So I think it's lagging. I definitely agree with him. Now it seems like Bitcoin may take a breather from this crazy run, and Mara looks like it reached the tipping point at around 17, getting exhausted as well. So 12 seems plausible, so that's something that I think we should be prepared for. But don't believe me, we will revisit this in a few days to see who is an idiot, broke ass tard. I personally am not typing it, yes, but saying that word, I feel like it's such a bad one. But yeah, this is what I was looking at earlier. I already liked it. He was saying swing high 1624 was broken, but then pulled back. Potential risk rising wedge, and price is right at the floor of it. I think this should pull back to 12 before going back up to 17 and then eventually going to mid 20s. What do y'all think? And so let's click on that post. We can see what I think. I said that Bitcoin is correcting over the long weekend. I've noticed Mara tends to follow, but with a lag, and that aligns with what he was saying. So short term, I think you're probably right. I expect both to be notably higher in the second half / last quarter of the year. And so that's kind of my thesis with Bitcoin and with Mara, but let's just look at his chart so we can kind of get an idea. This, we see this rising wedge here, which, that's basically like the way that he drew it. Over here is that resistance, and that would, extend that a little bit over. And then from the lows there, that, wow, I drew those points near perfect. So maybe it's a little bit bearish, but maybe this is also, it doesn't look like it's rising up too much. So I think you could argue that this is a rising or a ascending triangle, but this was following a downside move here. So this could just be more like a bear flag, or like what he's saying, a rising wedge, that this could be pulling back. So coming back to 12, let's see the lows over here. We're at 1263. I might just denote those by doing the 100% level there. And then I'll just make that light blue so we can see it a little bit better. And so this, this could most definitely be breaking down to around 12. And so he has that, did some Fibonacci retracements here. So I did a shorter retracement over here. So maybe what I want to do is another one, but kind of more similar to what he drew. 1135 is the 786. I've got 1140. It's approximately right. I believe that he does his charting on the log scale, so it's going to be a little bit different than mine. But yeah, 1140 approximately. Maybe gives you a little bit more of a buffer if it doesn't go all the way down to there. But 1261, let's see, 1265, 1263 got an alignment between that 618 and that low there. So yeah, I mean 1260, he's got 1261, so it could be breaking below there. So I'd look for that. So what he's kind of suggesting would happen is something like this. And oh no, he's suggesting more bullish than that. That could be getting up to, where did he say? 22, 24, somewhere around there. 22. Hey. So I'm actually going to doodle this a little bit different. And then it gets like a rejection, then breaks down to over here, and then goes up like that to find those levels, resistance around 22, let's say. So yeah, I mean, I think that seems feasible. I think that seems reasonable. I was hoping this was going to hold as a bull flag, but with Bitcoin pulling back, I think this could pull back some as well. Bitcoin goes up. I think this could go up as well. Maybe get rejected there. And yeah, but maybe it doesn't get rejected if it does pull back. Maybe this is just a dip buying opportunity. So I don't know. Yeah, I mean, this doodle goes out to basically the end of June. So if we do see some lower prices towards the end of June, I think that could potentially just be some nice dip buying opportunities for this to be going higher. So $22 from there. And I'm actually, let's see, I'm just going to go back here, scroll up to this. I'm just going to click on this post, see what the keyboard warrior was saying. What do y'all think? Not seeing 12 again. Keep coping that you missed that boat. I'm not involved in any of this drama. I think it's funny. I really like exchanging with him. He's always super friendly. And our views, our opinions don't always align. But I think he's just, a straight shooter. He says, okay, trader, I hope you are right. The traveling trader says, you clearly don't understand NAV price isn't even possible unless you expect a major dip in Bitcoin or IWM to collapse, which I don't. That's the only way it sees 12 again. Let's talk about this in a couple days, weeks to see if I understand this correctly. I kind of want to bookmark his tweet just because, so Jane Wong says, Bitcoin already new all-time high, but Maro only at 16s and falling down from the rising wedge. Another idiot who thinks miners are still correlated to BTC. This is why you're both broke. And that's why he said that. And so I think that these miners are still correlated to Bitcoin. I just think that if Bitcoin starts massively rallying later this year, I think that Marathon will as well. So yeah, I don't really care. So I'm not going to bookmark any of that stuff. I'll just continue to follow him and his posts. But if we look over at the contract data over here, this is stuff that I'm interested in. This is one that I hold. I've been stacking a little bit. $50 call that expires in January. Maybe it's a good idea. Maybe it's a bad idea. Looking at the chart, seems like there could be some resistance here around 22. Also, there's a high here around 30. So I don't necessarily think it's going to go to 50. But if we do take a step back in time, we can see that it got up to a high of like 83.45 in November of 2021, corresponding with Bitcoin's top. And so I think that we could be seeing some nice upside with this. And so I've kind of been taking advantage of dips with this contract, building up kind of a small position, as most of my positions are pretty small. We do look at the data over here, just expanding it. Net call and put premium. We can see that net call premium in green here ended the day down at almost $500,000. But net put premium actually came down more than 3 million. So that is actually, believe it or not, even though call premium was negative, with put premium being negative, that was a majority bullish day as far as the data goes. But if we take a few steps back, just add a few days on there, we can see that net call premium on Wednesday was up by $2.5 million, and then on Thursday up by $1.5 million. If we go back 7 days, we can see that those were the biggest days. If we go back 30, we can see that there was some pretty big buys. Going back to, let's see, on here, this is April 22nd, net call premium went up by $6.36 million on that day. Then over here on April 29th, net call premium increased by $6.35 million. And you can also see with those days, net put premium was relatively low and or negative. So that does seem like bullish for both of those days. Then we start to see it pick up a little bit as price starts to go higher. We saw a net call premium of over $10 million on May 9th. So I think that looks pretty good, but I want to be able to drag this. I can't. It's glitching out. Since then, though, we've seen price in yellow just kind of, double top before pulling back some. But there isn't really signs that these calls were being sold, because that's $10.75 million, green line going up. We haven't seen the net call premium, so maybe there was a net selling of $10 million of calls balanced by $10 million of buying. So maybe these were sold, but overall, we don't see $10 million worth of call selling over here. So that suggests to me that whoever was buying on this day is probably still holding. And so with that being, like I said, $10.75 million, that's a lot of money. And we can actually look into that contract just to get a better idea of it. So that was going to be May 9th. So let's look over. Just going from the flow data, the flow feed. I'm going to actually clear this search. I'm going to type in Mara here. I'm just going to narrate what I'm doing so you guys know in case this helps you with unusual whales. But yeah, Marathon Digital, type that up there. And I'm going to adjust the date, click in the time range here, to May 9th, because that is the day that we had, a lot of money on it. If I do look back here, that was May 9th. Yeah, over $10 million. So let's look at the flow data from the 9th. And I am going to filter the premium here to a minimum of 1 million. That's 100,000. There's $1 million. Okay, so we got these 3 contracts, actually 2 contracts, but 3 orders. This is the call that expired on Friday for $12 strike. That one closed in the money, so good for them. And this one over here is the $14 call that expires, that already expired. That expired on the 9th. So those were 0 and less than that days too. So let's just look at the data here. So the last date is going to be the 23rd. If I go back to, 14 days, that would include the 9th. Yeah, it doesn't seem like, it seems like, I don't know. Let's see the data over here. So from the 23rd, scrolling down here, the historical volume and open interest. So from the 9th, 7,000 contracts purchased. Actually, no, only, it looks like the majority were actually being sold because it came down by 4,000. So the change there. So that's interesting. Yeah, so I don't think that this is anything necessarily too especially bullish. Because if we do look at the data here, so not the past 90 days, I'm just going to switch this over to 1 day, this over to 1 day, and then I'm going to adjust the date up here. Something I learned from watching one of Unusual Whales YouTube videos is that we can adjust the dates. We can look at what happened specifically on the 9th of May. And so we can see that, 1 million call premium here, And then over here, 1 million again, candle premium, or candle volume there. And yeah, it seems like that was probably like buying the top. And so this was 8th, 9th. Yeah. So yeah, I mean, I think that this could be happening, this doodle here. So I'd be prepared for around 14 bucks. And if we get down to there, then I'd prepare for, 12 bucks, just to have a plan if it does happen. And so with that being said, I should probably cool off with the call buying, but I do have a buy order placed for a contract. I guess I can share if you guys are curious. But for this contract, the $50 strike call that expires in January, I was buying it more aggressive than I probably should have. But for that, just for your curiosity, I've got 8 of those contracts, and my average is $1.05. It recently hit a high, if I go back, $1.18, $1.08. But I think that I was getting my average down here. I think I bought the dips around 90 these days. And actually, maybe I bought the dip on Friday as well. I don't know. I've been a little too aggressive, I think. So I bought some at 90, 95, 83. Also bought some at 70. The lowest I bought was at 69, as I'm sure you could guess. But yeah, my average is at 105. And I do have some limit sell orders placed on those just so I can forget it. So I got 8 contracts. I have a limit sell for 7 of them at 178. Take enough profits to cover whatever is remaining in there, and then just hold on to one as a runner. See what happens. But yeah, that's one that I'm excited about, but I am also bracing for further downside. So good to keep that in mind. I'm going to eat a little bit more popcorn, and then I'll just continue down the options list. All right. This is one I'm really excited about. I'm going to note it in the notepad. Peloton. And yeah, so let's go over the chart first. And actually, to be honest, I didn't really do any analysis in Webull for Peloton. I don't know why. I just decided to do the analysis in TradingView. So let's look up Peloton and see what I have drawn. So looking at the daily candles, but on the shorter time frame, I have an inverse head and shoulders pattern there. That would suggest price going up from the base of that head to the neckline, and then doing that same distance, going up to around 950, maybe 10 bucks, somewhere around there. So that would represent from where price is currently at. If it went up to around 950, that's about a 20%, 25% swing to the upside. But with this, I'm not really sure why. I was looking at this with a bigger perspective that, hey, there's another inverse head and shoulders. This looks like, consolidating down here. We got the RSI there. I'm just going to remove it. We can see the volume there. Volume, I mean, it's been picking up. I'm trying to get better, Wyckoff analysis and stuff. But yeah, over here, volume has been, I'm going to disappear myself for a second. Volume's, been pretty low over here relative to the spikes we've seen here. So I think that's kind of good. But yeah, I mean, I'm not the best at Wyckoff analysis or anything. So I think we kind of have to take that with a grain of salt. I'm just going to move that up there so we can see it. But yeah, I mean, I think that this just looks like there are two, oh man, there are two pretty clearly bullish patterns here with this potentially getting up to $10. So I feel like that's a kind of a nice swing. And I have to say that this was put on my radar because of the Bronx Viking. He was posting about it. So I'll just pull up what he was posting. He's posting a lot of stuff. He posts a lot of memes, a lot of GIFs, has a lot of fun. PTON, hey, right? Oh, well, it's because I searched for it. So let's see. The latest, EU and USA agree to 0% tariffs on towel racks over $1,500. And so that's apparently good for Peloton, I guess. God bless America. How many Peloton bikes are they going to buy from us? And so, yeah, this was on May 23rd, so Friday. He put it on my radar a little bit before here, but he's saying flip this level and it's going over 10 on the technical setup alone. And so that level is 752. Let's look over at the chart. We flipped that level, closed the week above 752. Maybe it's not, or no, that was so the level that he has marked there, I believe, is 754. And so we closed above 754. So we technically did flip that level, but it would be good to retest it before going higher. And flip this level, it's going to over 10. That's what he's saying on technical setup alone. Throw in some insane out of the money flow and now a massive dark pool 1 hour before close heading into a holiday weekend. Something is up. So, yeah, this is on the 23rd. He posted this. Big intraday dark pool just hit. Almost $10 million. So let's just see. This is Peloton, 19 million. This is dark pool. I don't know how you tell if this is calls or puts. Consumer cycle common stock. Oh, it's dark pool buying of stock. Almost $10 million at 742. And with it being just a little bit above that, that's bullish. And so let's see. I'm just going to continue to scroll down. This must feel what? Oh, I don't want to scroll down on that. Let's look. Peloton, TikTok, bicycle run, bang, dollars. Whoa. It's a little bomb there. Let's see. Peloton premium surging the last 30 minutes. We can actually look over at this so we have all of the data. Climbing our way to the top here, Peloton. Let's see. I'm not sure what I saw when I saw it. Had to have been a few days ago, but yeah, just lots of GIFs, lots of memes. This is probably what I saw. Or maybe, no, I think I got to go back to what I started liking. Back here, so this is on the 21st. Another $900,000 worth of the $7 calls for July 18th just hit. These do not look like closes as they are all at the ask, and the IV is increasing as orders are filled. So he's done some nice detective work on that. We could do that in the flow here. I might as well. So if you look at Peloton and we restrict the date to the 21st, and we limit that premium to a minimum of 100,000. We get to this one, $7 call July 18th. So that does match what he's saying, $7 July 18th. So if we click on that contract, we can then see what happened. Was it buying? Was it selling? So on the 21st, wow, actually, what was I looking at? Over here. So he was posting this on the 21st. But yeah, 900,000 worth of those calls just hit. But let's look at this data over here. So what we see for that contract, $7 strike expiring in July 18th. We could see down here that on the 20th, volume was 100,000, over 100,000 contracts. Open interest was 6,000. And then that went up by 74,000 contracts, have an open interest on the 21st of 80, over 80,000. 36,000 contracts traded on the 21st, open interest going up 18,000. Currently, at that time, on the 22nd, it was 99,000 contracts open. We did get some selling of about 2,000 contracts, so the open interest on Friday was around 97,000 contracts. But here we can see total premium here, millions of dollars traded on it, and we can see that the premium, the price or I should say the net call premium, along with the stock in yellow there. So the net call premium is in green. And so on Friday, that went up by $1.02 million. Maybe it's a lot, maybe it's not, before holiday weekend. So I don't know. But the net put premium also went up, but only by $250,000, that red line there. If we go back the past few days, we can see that net call premium was actually higher than it was on Friday. On Wednesday, net call premium went up by $1.12 million, whereas net put premium on that day was negative by about $300,000. If we go back the past 30 days, just to get a bigger picture perspective, and actually looking at this bigger picture perspective, the thing that stands out to me is, I believe this was Tuesday the 20th. So let's just go back 7 days so we can see this. Pretty big spike in net call premium, going up over $3 million on that day, the 20th. And that's when price was lower in yellow here, has gone up. So maybe trimming a little bit, seeing that open interest coming down for that one July contract. Not too surprising, but still, this just seems like, it's got the momentum. And yeah, looking at the chart here, I didn't do my analysis over here. So if I pull it up over here, I agree with Bronx Viking that this could be going up to $10. $10 minimum, I have no idea. But I do know that I do have a small share position, and I do have one of those contracts. So let's look over here at this contract. So this is the $10 strike call, January. So $10 seems like price could be hitting that in the near term. And the January expiration, over 230 days to expiration. It looks like about 235. And so what I have, if you're curious, I have a whopping 5 shares. Nothing too crazy. Oh, wait. Nope. Sorry, that was Marathon Digital. I want to look at Peloton. I have a whopping 2 shares. And my average is 660, so I'm in the green. As we can see, the low on Thursday was 635. My average is where the cursor is, right around 660 there. So I'm doing all right there. Peloton. And then I just have one of those contracts, so it's kind of lame, but I'm happy that I got one because Bronx was posting something that looked bullish. I looked very briefly into the unusual whales data just to try to understand what he was posting. Makes sense, seems bullish. And then what I did is I looked over at the chart, identified some things that actually looked pretty bullish to me, and I actually had an alert for, I believe, $5 for Peloton. And I was ignoring it when that was hitting. That was, during the kind of the panic over here with the Liberation Day. So the lows over here, April 7th. There's a lot of panic there. It was a really nice dip buying opportunity for Peloton because where price is currently at, buying the dip down there, let's say just buying it at 5, it's up 50, almost 51%. So that's pretty nice. So yeah, just like I was saying, look at the chart here. It looked like there's some bullish patterns. It looks like $10 is a reasonable target. So, maybe that's a good contract. And so for this, I picked up one of these contracts for 75 cents. So it costs $75 to get one of those contracts because it's 75 cents per 75 cents per share. Each contract, 100 shares, 75 bucks. And so let's see, when did I buy that? Probably on the 21st. On the 20th, actually. So over here, so the low on the 21st was 64, the high was 80, and I was like, maybe I want to get a fill at 69 or something. Might have not gotten filled. Maybe 70 might not get filled. I'll just do 75, seems fine. And so from there, I could have gotten a fill probably at 69 the following day. It did dip, but I was just chilling. And then the next day on the 22nd, the low was 86 cents, so I was in the green for that full range on the 22nd. And then the low on Friday, the low was 103. And currently it looks like it's at 134. And so it's just one contract, so it's not a huge deal. But let's see. I'm up 77% on that contract. Do I plan on selling at 100%? No. I have a limit sell at $3 placed. And why do I have it placed there? We can just look over at the contract charts here. You can't see it, but that would correspond with kind of like the, let's see, the tops over here. So like the cursor is right around $3 there. So, I'm thinking that it could be going up there. Does it close? Dang it, this is Mara. What am I talking about? I keep going to Mara for some reason. I want to do Peloton. Sorry about that. So the highs over here, this looks more like what I'm looking at my phone. $3 right around here. So yeah, even on this chart, inverse head and shoulders. So that looks really good. I don't know if this plays out the same with contracts as it does with shares, but the neckline would be around here. That'd be suggesting this could be going up to at least 186. But I think, I'm going to see if it goes up to 3. And if things start to die down, if things start to cool off, or there's some clear euphoria, got to get better at acting on that and selling, then maybe I'd sell there. But, I just got limit sell, $3. I feel good about that. And let's see, what is 0.75 times 4 is 3. So that'd be a 4x for me. So I feel good about that. I'd be happy. And I still have some shares to hold on to. So yeah, those are the ones that I'm really excited about. And then, so I guess I'll just go through the other ones on the list here, just to kind of evaluate them. I see that maybe there's still one more person here. So hopefully this is entertaining, useful. But yeah, I'll just start probably just going down the list, I guess. I'm going to take a little bevy and popcorn break. So yeah, this is a fun Sunday night. I don't have to be at work tomorrow for Memorial Day, so working on some projects and stuff. I got stuff to do, but not too much. I gotta eat all this popcorn. All right. So I'm just going to go down the list here because these are the contracts here are either ones that I hold or I'm just curious about. And so I will start with the next one on the list, which is AMC. And so I'll click on that. This is a contract that I do hold. I have been trimming out on it on a loss because it expires pretty soon in 25 days. This is the $8 strike. Do I think AMC could be at $8 on June 20th? No. But I think maybe it could swing up to $8, get rejected. So I think that's a possibility. So let's just look over at the chart here at AMC. Kind of got this doodled out. 318, we got close above there. Also a weekly close above 318. So I think that's good. But it'd be nice to see a close above Thursday's high, which was 327. And yeah, I mean, I think that there could be some considerable resistance around 365 because that was where AMC raised capital. And so then that could be maybe an inverse head and shoulders pattern there. So I'm a little bit concerned that it could get rejected at 368. But if like GameStop's running, meme stocks are running, and AMC goes along with it, I think it could be getting rejected there. But it could be going up to around $5, forming kind of an ugly inverse head and shoulders pattern there. And then from that, that would be suggesting, price could be getting up to around double digits, I believe. If I just do kind of a rough measurement here, 875. So yeah, I mean, this does look really good. It's broken out from, you can draw it different ways, and I'm sure that mine's incorrect, but this is just a level that stood out to me, this yellow downtrend. And it's the same one that I've always covered on it. So if you look back at my other videos, that's it. But yeah, I mean, we've broken out from that. I was thinking we could pull back and retest before going higher. That does not seem to have been the case. Maybe we get a pullback and retest that gap level or right around $3. Let's look at what max pain is for AMC. What was it on Friday? I believe we closed just above max pain. So it's like $3 all the way down here. So looking over here, closed above max pain, 324. So that's good, but not like multiple strikes above max pain. So it's not really anything too crazy. So yeah, I feel better about GameStop than I feel about AMC. But let's just look at the data here. So AMC, this contract, like I said, I've been trimming out of my position at a loss. I don't have that many more of these contracts left. But I just, it's getting too close for comfort for me. I got a bunch of shares, so I'm fine. And to be honest, I mean, if it does go up to like my break evens, I'm probably going to be trimming some shares because, it's been like 4 years and I feel like there's just been a very heavy opportunity cost to holding AMC, and I don't really like that. But yeah, we could see a net call premium in green up on Friday by about $428,000, whereas net call premium in red was negative. It came down by about $150,000. So generally, that's bullish. We can see that the bear bull slider is more on the bullish side, but it wasn't too crazy. It wasn't like doing what GameStop is doing. If we look back at the past 30 days, we've seen some pretty, hey, I mean, this actually makes me feel pretty good, but it's only $500,000. So that big spike in call premium that we see there, that was on May 16th, net call premium went up by over $500,000. That's it, not millions. So this doesn't look that exceptional to me, in all honesty. So I'm kind of just chilling. AMC, nothing too crazy. And yeah, I need some more popcorn. This is so sad. When nobody's watching, and I'm not listening to music or anything, I'm just eating popcorn by myself, looking at charts and recording it. But yeah. The next one on the list is going to be BlackBerry. This is one that I think I feel all right about it. Although this does look like it kind of is rolling over. Maybe a bull flag, but rolling over. Maybe pulling back to like 369 or this level here around 360. Could be going lower, finding some support around 340. Could happen. But I feel like this is getting ready to do this. You know, it's like, hey, it's a bull flag. Psych, it's not. Psych. You know, it is. Something like that could happen. But I don't know. That's probably just some hopium. Let's look over at the max pain for BlackBerry. What was it on Friday? 350. 350 around 4 for the next few weeks. 350 closed above it, so not looking too bad there. Let's look over at the data here. I do have this contract, I believe. Let's see. I'm just going to pull it up on my phone so I can see it. I have 6 of these contracts, so nothing too crazy. My average is 28 cents, and I plan to sell 5 of them at 33 cents because selling 5 at a 20% gain means that the one remaining contract that I hold or would hold would be covered by the 20% times 5 profit I've made on those contracts. So that's, yeah, kind of my strategy with that. Let it run. Expires in January. This is the $7 strike call. I do have a dip buy order for 20 cents. And the low on Friday was 21 cents. That was not filled. But I think I got a fill for 22 cents on Friday as well. I've started to be a little more aggressive. So on Friday, got a 22-cent fill. The last time I bought was at 18 cents on May 6th. Just one contract at a time. I'm not too crazy. But yeah, just looking at the data over here, what we can see, net call premium went up, so this makes me feel good. Even with the stock price pulling back, people were still buying that net call premium going up. But pretty cheap. Net call premium only went up by less than $100,000. Net put premium came down by $6,000. So, you know, it's not really that crazy. If we look back over the past 30 days, we have seen some ups and downs. So kind of tough to say. Like the big spike in net call premium here, which was on the 8th, net call premium went up by less than $250,000. So yeah, nothing too crazy with that. Yeah, I went over BigBear AI as well as Webull as well as GameStop. And so the next one will be Intel. And this one, yeah, I feel like this is kind of broken down. I'm wondering if it's going to find support around 20. Intel closed at 20.05. I imagine max pain for Intel was $20. 21 actually, so we closed below it. And we are below max pain. So this actually doesn't look so great. And I'm going to note it in my notebook that I'm going over Intel now. And yeah, so got the 618 there at 1966. This could be coming back lower. This could be like an abandoned baby or something, maybe, or, you know, spinning top, gap down, and it bounces. I'm not sure. But if we look at the data over here for Intel, yeah, this data doesn't look that good. So the contract that I actually don't hold, I do have a buy order for it. But looking at the chart, this I was feeling less convinced that this was doing well. Oh, because of max pain. Yeah, so maybe I actually want to cool off. Maybe I don't want to have a buy for this contract at least. I've swung it in the past, but I'm not holding it. But I'm just going to expand this so we can see it a little bit better. This is for all of the call and put premium for Intel. We can see that both calls and puts were negative here. It looks like net call premium, which is in green, came down by about $850,000, whereas net put premium came down by about $1 million. So overall, it does seem like it's majority bullish, but really it's like 1/3 bearish, 1/3 neutral, 1/3 bullish. So take that with a grain of salt. Going back the past 3 days, we can see that, yeah, net call premium hasn't been really that exceptional over the past 30 days. This seems pretty speculative. So, you know what I'm going to do? I'm actually going to remove my buy order for that contract because I think it seems too speculative right now. Maybe I'm wrong. I am holding a few shares, nothing too crazy. But yeah, I mean, that's fine with me. I'm okay with it. But I'm not like super bullish or wanting to spread myself too thin. You know, I would add if it came back to my average, but it's not. My average, by the way, for Intel is I think 1910. Got this alert here at 1910. If it comes down to there, I think I have an order placed to get a share, but I will also have an alert down there. Or maybe I don't have an order, maybe I just have the alert. I think I probably just have the alert. I can actually check on my phone. Yep, I just have the alert. No buy order there. And but yeah, let's continue on to the next one on the list, which is Moderna, ticker symbol MRNA. This is not one that I hold. This is one that I was considering adding to or buying, but I did not because I just don't want to spread myself too thin. And let's see, what do I see in this chart? Like I haven't really done too much with it, but it does seem to be like consolidating down here. Like pretty clear rejection from the tops over here. You know, rejected there. Nearly got up to it, rejected. So that's a level that we need to break above. But, you know, what I saw was from Mr. Chart Norris, I believe. I'm actually just going to delete these searches there. Mr. Chart Norris. And from his page, I will pull up mRNA. And, you know, it's like you shouldn't base your trades on, you know, what other people do and stuff. You should have your own conviction. And I actually had some levels down here. I think this is 26. I might have just adjusted that or added that, but I did have some levels down here. I think probably at 26. But I stopped paying attention to it and price got back up there. And so I was getting some alerts, but it's like, don't want to spread myself too thin. But yeah, Mr. Chart Norris was posting about it. So from May 20th. Don't forget, there is only one Mr. Chart, but again, as an alert seeker, you won't get me mRNA. So Moderna monthly candle chart. So, you know, big time frame, February 27th. I would be much happier if this crap disappeared, but 20 to 25 is good. So 20 to 25. So we were in that range. And let's see what he has on this chart here. So, and this would be suggesting to me that there's going to be some resistance around, post. I don't know what post means, but resistance around like 32. That would be corresponding with the low from over here. So that's the monthly. So let's look at this on the monthly. And so that would be this low from November, end of 2023. So that seems to make sense. And that's around 62 bucks. So that's potential 3x. Just if it gets to there. Wait. Yeah, apparently. But these are the monthly candles. So this would be a multi-month hold. You know, in order for it to get up there. Because these are monthly up here. Monthly. So this is showing, he posted this. When did he post that? In February. So he posted that over here. This would be February. And it's gone down 2 more months. Bump, bump. So this would seem like the bottom based on what he's drawn. But then you'd probably see 1, 2, 3, 4. So really, I guess 1, 2, 3, 4 more months. So potentially a 4-month hold. So there's that. Looking at this on the daily, this does seem like it's potentially broken out. So that looks good. Broken out, retested at 26. What was the max pain for mRNA? 25. Closed above 26. So that seems good. I'm really curious to look at the options data because I think that this one could be really nice. And hey, what's up, Michael? How's it going? I'll look over PFE after this. But let's see. Bought PFE, which earnings is crushing on April 29th. That Moderna can't make a profit. Yeah, so I mean, I'm just trying to look at the chart and the data, seeing what other people are suggesting for their analysis. But yeah, this upcoming Friday, max pain is 26, so that could be a tough level, an important level for Moderna to be holding. But it does look like, from this, I could even draw this trend line going back further. That's a pretty notable breakout. Been multiple tests and rejections, gotten above that, but I mean, it is downtrending, and so this is a pretty small move. But yeah, $26. So let's see the contract lookup for Moderna. So this is the one that I guess I'd be eyeing. $55 strike for January. Premium though, it's around a dollar, so that's $100 per one contract. Maybe it's one that'd be interesting to get some shares of. I'm not really sure. But let's look at the options data. I think it's really good. We want to look at the data, not just base things on charts or, following other people blindly, but look at the data. And so what we can see with Moderna for Friday, net call premium decreased by $1.23 million. That's the green line here. Whereas the red line, which is the net put premium, increased by $664,000. So that seems a little bit bearish, although from the bear bull slider, we do have a majority on the neutral side, less so on the bullish side, more so on the bearish side. So yeah, I mean, this does seem bearish. If we look over the past 30 days, we can see that it's kind of noise, So once I start seeing some really bullish data here, then, I'd potentially be interested. But right now, I'm not. I was thinking about it, but I'm not. Nio, this is one that I'm pretty sure this contract's going to go to zero. $8 call that expires in 25 days. Shouldn't have done it. I'm just losing money on Nio contracts. Yeah, let's look over at the chart here. This is actually one, I had drawn this pennant thinking, hey, maybe it's like a bull flag, but then we see it hit lower low. The low over here on May 7th was, and Michael, if you want me to go over Pfizer, I can definitely do that. But I'm just going to continue on with the list. It sounds like you're not too happy with Pfizer. So I don't know if there's anything you'd like me to go over, I'd be happy to. But yeah, hopefully my thoughts on Moderna were a helpful perspective. I'm not convinced it's go time with that one yet. And so with Nio, closed on Friday at 382, we'll have to check what the max pain was. But yeah, I drew this pennant thinking it could be holding higher lows. The low on May 7th was 382. Interesting, we closed at 382, but we did wick below it, so we put in a lower low with the low on Friday being 374. Not much lower, but still. But anyways, this could be a bull flag, and that this could be starting to break out. If it were to do that, since this is a lower low, that would correspond very nicely with the second gap fill up here around 316, or sorry, 516, 517. But as you might notice, that's not $8. And that's the contract that I was looking at or holding, trimming out of at a loss, because I have lost a lot of hope with this. I've lost a lot of conviction. Yeah, I've just spent too much time with this stock, and it's not been worth it. But yeah, looking at the data here, let's dive into that. Don't really have anybody else's analysis to go over. I believe Mr. Chart Norris said, that NIO's trash. And so I kind of don't disagree with him. No problem with Pfizer. That pays 43-cent dividend. Cool, nice. Each quarter, it made 92 cents, which was a 26-cent beat with upgrade on Wednesday to $30. So very cool. Glad that that's working out for you, that trade. Yeah, I haven't really gotten into, and I don't really like doing like biopharmaceutical stuff. I just feel like it's not like the kind of stuff I understand as well, or it's too pricey for me to get involved with, something like that. Like I'm more interested in technology, I guess. But yeah, with NIO, the data over here, I guess this seems a little bit bullish. We do see the bear bull slider more on the bullish side, so in favor of that. But it's only 53%. And we can see that the net call premium went up by 138,000, so it's really not that much money. Net put premium went down by 142. So generally that's bullish, but if we look at earnings coming up on the 3rd of June, so maybe this would pop. But yeah, I mean, we saw net call premium going up by $1 million on the 20th over the past week. So that's like the highest, but it's just 1 million, 1.22, 1.2. And I'll do 7 days so we can see that. But yeah, I mean, it just doesn't, I've just lost a lot of conviction in this. But I do have some hope that, hey, maybe there's some data here suggesting that the bottom's near, and maybe this pennant and or bull flag is suggesting that price could be moving up to fill these gaps here. And so, we'll have to see, but I'm net going to be losing a good amount of money on NIO. Just because I got into contracts too early and I got in too heavy with them, but it's a good lesson learned, so it's okay. Michael, you think tech's better to understand? I think biopharmaceutical stuff is interesting because it's like a lot of times it is tech, but then it's also biological, medical layers of things that I don't necessarily focus on too much. And I've experienced, the bleeding with massive pops on FDA approval or FDA progress. But then the continued bleed after that. So I try to stay away from that stuff, or at least that's what I've kind of been learning and appreciating from my successes and my failures. Oh, and I did mention it. Moderna, no, NIO. I need to pull up NIO's max pain. I did mention it, but I didn't look at it. So NIO's max pain, $4, currently below $4. So what would be really good, what needs to happen is NIO to start moving above $4. And what we can see, I'm not the best at analyzing this. Looking at the volume here, volume's pretty low as this has moved up and it's consolidating. So maybe this is getting ready for that next leg up. But I made a lot of videos, hopium videos on NIO taking off, and they've not paid off. So I'm very reluctant to kind of cover NIO at this point. And so the next one on the list is going to be Oklo. I do not hold any contracts with this, but I do have one remaining share, so nothing too exciting. These contracts, I think, were just too pricey for me. Yeah, this is like the low. Wow, pretty massive swing. This is the September 19th. Expiration for the $60 call. Oklo is around $48, but the low, wow, on Friday was $5.27. High was $10.60. The low on Thursday was 284, so pretty massive moves there. But yeah, I mean, I just didn't want to be spending like over $100 even back here on the 13th. The low is 153. I don't want to be spending over $100 per contract. So I didn't look at that one. We also have the $85 strike. This one, yeah, still above, $100, but swung from 236 on Thursday up to a high of 810 on Friday. The $60 call that expires in January. This is, over $1,000 per contract basically now. So too much for me. 85 strike for January. Again, hundreds of dollars. So I have not been partaking in the contracts of Oklo. I have really just been participating in the one remaining share that I have. I took some profits up here. Could have waited for it to get to this level here, 47.78. I think I probably just drew that, not necessarily arbitrarily. I think I just noticed it, thinking about where it could be going to, thinking about the consolidation lows over here, that could be acting as resistance. And so I suspect that the high is probably in around 52.17, which was hit on Friday, before maybe a little bit of consolidation and then maybe a continuation higher. The 52-week high is 59.14. And if we take a step back in time, that is the all-time high. So I think that we could be getting to all-time highs with Oklo. So I plan on just holding my share. I believe my average is below $28. And so I just got a stop loss at $28 and I'm just going to chill. Maybe if this does start to cool off and starts to show some weakness, I'd increase my stop loss to, somewhere in the 40s. But right now, I think that would just get hit and I don't want to be offloading my position. But let's look at the max pain for Oklo. Maybe this is getting into like gamma squeeze type of activity. So the closing price on Friday was $48.87 with the max pain being $37. So yeah, this seems like it's gamma squeeze territory. 34, 31, 32, 28 for the monthly expiration. So yeah, this is pretty massive. I wonder if this will be going up to triple digits. I have no idea. But Oklo, I wish I was holding more, but I have like zero emotions with it. But maybe what I want to do is pick a target level. Where might I want to exit my position? Maybe I don't want to have a stop loss. Maybe I think this is going to go higher. And where could I see it going to? So I'm just going to draw this from the low here, 535, up to that high of 59.14, and then pulling back to the lows over here. And I'm just going to do that approximate. And we can see that the 100% extension as well as the 1618 are above us. I'm really just looking for the 1618, which I'm going to have to adjust the y-axis to see that. I have already drawn it apparently. That's funny. So that is not locked into place, but it's around $70. So what I could see myself doing, selling at 69, that'd be a nice little trade. So let's see, I'm just going to pull it up on my phone so I can let you guys know the math that I'm doing, which is really not that exciting. But Oklo, so I have one position, or one share, very not exciting. But with the calculator, my average share price, one share, is $27.52, very not exciting. And maybe actually what I want to do is multiply that by 2. Okay, 55. We've nearly hit that. Maybe I want to divide it by 2 and then multiply it by 3. 82.56, a 3x. Maybe that's getting a little bit greedy, but maybe we go past this 100%. Let's see where that 1618 is. Oh, I don't have it up there. So I'll add it just for fun. Not expecting it to go as high as this level is. But where is it? 103.96. Could price go up there? Maybe. I got a trend line here. I'm just going to do a ray so I can get like the pivot highs here, just being kind of approximate. I think that this could be going past that 100%. And so if my 3x price is 82.56, I might remove my stop loss, which is maybe a sign that it's going to pull back. And I'm going to place a limit sell order for my one little share, very small, just to take a 3x. I'd be really proud of myself for getting a 3x. Very little emotions, 82.56. Selling that one contract at 82.56. So we'll see what happens. That'll be all-time highs. And then at that point, people will probably be like, oh, it's going to 100. And then there's a lot of euphoria, and then it doesn't actually get to 100. So that would make sense psychologically. So I kind of like that. And let's see, other ones on the list that I should be getting to. Peloton I have covered. It's the next one here. It's going to be QuantumScape. So I'll go over that in a second. I'm just going to eat some more popcorn. I feel like, though, I'm getting better at my trading. Looking at the data here, comparing the chart with the options data, and seeing what other people are saying on X. If there's a confluence of analysis, of levels, complementary analysis, I think it's good. It's good to check with your peers. Maybe they're wrong, maybe they're right. I don't know, maybe I'm wrong, maybe I'm right. But yeah. Excuse me for the munching. I'm just going to go over QuantumScape now. Ticker symbol QS, which closed on Friday at $3.97. I imagine max pain was $4. And so let's look. It might actually be higher than $4 because the price was recently so high. So QS, max pain was $4, and it looks like it's $4 moving forward. So closing below $4, not so great. And also, this does look like, you know, a bear flag, downside consolidation. And so I guess I have an alert here. That's funny. At 369, I want to quit. I'm saying place a large buy order at $3.50. Like, okay. I think I have a buy for one share, maybe 4 shares at 380. I currently have 36 shares, so not a very big position, but it's more than a few shares. I kind of don't feel like I should. I mean, maybe it doesn't go down to 350, and if it does, you know, it's like this 380 order for 4 shares. If that fills, that's okay. You know, that's fine. Now I have 40 shares. But then if it comes down to 350, I'd be more excited about that. Because just consolidation lows, basically. That's why. But, I mean, this stock could be going to zero. Speculative, no idea. Let's just look at the data over here. QuantumScape. The contract that, let's see, I do hold. I have 5 of them. This is the $10 call that expires in January, so 235 days between now and expiration. It's a $10. Oh, actually, no, this is not correct. Oh, yes, this is. Sorry, I'm an idiot. I saw 20 cents and I thought $20. Yeah, the $10 call that expires in January. Why would I pick 10 bucks? Because there was this high over here in July of last year, around 9.50, so 10 bucks. Kind of makes sense. And so I've got 5 of these. My average is at 31 cents. The low on Friday was 18 cents, but I do have a buy order for one at 18, and that was not filled. And yeah, and then I have a limit sell for 5 at 38 cents. That's 20% from 31, my average. But thinking about this, does the data suggest that it's bullish? And so over here, got an insider selling, so that's not good. But we can see that net call premium on Friday did go up, so that's good, but it only went up by $66,000. Whereas net put premium came down by about 2.8 thousand, not very much, basically flat. So generally, this is bullish. If we do look at that bear bull slider, it is in the majority bullish side. It makes sense looking at the data. As price is rising in yellow, net call premium is rising in green, while net put premium in red is flat. We'll look back over the past 30 days. Whoa, we can see this big purchase over or net call premium. This is 1, 2, 3, 4, 5, 6. So I'm just going to go back past 7 days. So we can see that $1.09 million. That was buying into this top though. So maybe it was a bad decision. Maybe there were short dated calls. Maybe it was YOLOs and somebody lost some money there. That was on Friday, so I wouldn't be too surprised about that. So yeah, maybe that's, I don't really think the data here is that compelling. This looks like a bear flag, and I feel like my order at 380 will get filled, and I feel like my order at 350 will get filled. So yeah, I mean, this is probably not the best one to be buying or going long on. I'm just kind of, let's see if maybe it goes up to where that gap fill was. That'd be suggesting a price of $3. That'd suck. But yeah. So I'm not feeling super bullish on this, but you know, it's one to be paying attention to. I think it will be going lower, but if not, maybe it doesn't. Maybe if the stock price doesn't go lower, maybe the contract doesn't go lower. I don't know what I was saying there. The stream's gone on for a little while, over 2 hours. So maybe I'm getting a little bit loopy. And so I'm just adding the next ticker onto the list just so I can kind of have them in the comments. And so this is going to be SoundHound AI. I was holding some of this, but I no longer am. And yeah, there's some stuff that like I was intrigued by with the chart, but it's like it wasn't enough, and I just felt like I was risking spread too thin. So SoundHound closed on Friday at 9.58. And yeah, I noticed this trend line looked like it was holding that, but then it's kind of breaking it now. So that doesn't really look that good. I was hoping for a pullback to around 10.20 and a bounce. We got a pullback to like 9.50. The low on Friday was actually 9.27. The low on Thursday was 9.26. Maybe this is, just an ultra discount before going up, but also maybe not. So let's look at the data over here. I do not hold this contract. This is one that maybe I was previously tracking, maybe one that I previously held, but I don't anymore. This is the $25 call that expires in January, so 235 days between now and expiration. And so why would I pick 25? We can see this line up here. That was the highs from December 26th of 2024. Around $25. So that's kind of why I could see that going up there. Finding this purple line as support that was at 10.25, which was a high on Pi Day of 2024. And so I find that to be intriguing, compelling. I am interested in it. But we're now below that level, so maybe it's a little bit concerning. If we look at the data, so let's see that. Actually expand that so we can see it a little bit better. But we could see net call premium did go up on Friday by about $300,000, whereas net put premium went up by less than $100,000. So, I mean, it is more bullish than bearish, but it's really not that convincing. I'm not too compelled by it. If we look at the past 30 days, we can see some big moves up here. This was so not on Friday. This was on Thursday the 14th. So maybe that makes me feel a little bit better. 1.59 million shares, or sorry, $1 million in net call premium increase. So that does seem good. It looks like more net call premium increase than net put premium decrease. This was down by about $850,000 on Thursday. Actually, that's good. I mean, we're seeing call premium increasing, put premium decreasing by about 850,000. So that's bullish. This seems bullish. This seems not so bad. If I just look back over the past 7 days, though, I guess this cuts it off. Oh, wait, I want 14 days, I guess. Yeah, because we want to include this. 1, 2, 3, 4, 5, 6, 7. That's the 8th day, so not included there on the 7. But yeah, so I'm not sure what these contracts were. Maybe they expired on the 16th, but this doesn't look so bad. But I think it's just kind of like spreading my focus too far out. So I'm probably not going to participate in that or be paying attention to it. But I should look up what the max pain was on Friday. It looks like it was $10, and we closed below $10. So that doesn't seem so good. So yeah, I think it's a little bit risky in that sense. And like with Moderna, I believe that was closing below max pain. So yeah, I'm not in this one. Not planning on getting back into it unless it starts to show me something that really stands out. And so what I might do now is then go over Unity software and have this one be the last one on the list, because this is the last one that I do have in this list over here. And so looking at Unity software, let's actually just pull up the chart. And this one, I've been kind of disappointed by it. I've been like hoping to get back, or hope, 4-letter word, that it'd get above this orange trend line, which it looks like it's been consolidating below, kind of getting a double top below there. So maybe not looking so good, but what we see here with this rejection, lower volume, the rejection over here, higher volume, but not enough to keep it up there. So maybe what we're seeing is rejection there, but if like GameStop is starting to run, I think Unity could be potentially a sympathy play. So yeah, I mean, I don't really know, but I know that this is like kind of, in my view, discount zone. I think that Unity software could be getting up to like $45 or so, but maybe not. Maybe my thesis is incorrect and this is getting rejected. Did close at 20.75 on Friday. So let's see what the max pain was. Maybe that's going to offer some encouragement. 21 over the next few weeks, then 21.50. So yeah, I mean, that doesn't really seem that good. Maybe not so bullish on this. And with that being said, just going over some of the contracts. This is one that I hold that I have been trimming out of at a loss. And maybe I actually want to do that a little bit more aggressively, just because unless the options data that we'll look at, the net call and put premium, if that suggests that it could be bullish, could be turning around, maybe I don't want to be so aggressive in getting out of this position. But this is the $42 strike call that expires in June, so about 25 days from now. And my thesis for that $42 is getting up to, this like neckline for this inverse head and shoulders pattern could still be playing out, but it's just taking its time to get up there. And I was just a little too early with that expiration date. I also have some calls that are the $65 call that expires in January, so 235 days between now and expiration. This is one that, because I've been trimming out of the $42 call, that's probably going to go to zero. The $65 call, I've actually been buying this or adding to this on dips, rather than adding to the $42 one. But yeah, if we look at the data over here, we can see that, yeah, I mean, net call premium in green, negative on the day on Friday, down over $112,000, whereas net put premium came down by less than that, by about $56,000, almost 57. And so generally, because there's more calls being sold, more net put premium coming out, it's more bearish than bullish. But if we look back over the past 30 days, just to get some perspective, lots of calls selling over here. So this was on the 8th. On the 8th. When was that? That was over here. So, I mean, they could have waited a few days and got a little bit up before this is pulling back. But yeah, I mean, this could be very ugly, but this could be, you know, inverse head and shoulders. I don't know. Very ugly. But yeah, I mean, I'm excited if this does dip, if it comes down to this gap fill at 1925, you know, I'll be adding there. But I will be accepting some losses. I have been accepting some losses on the contracts, specifically the $42 call that expires less than a month from now. But that's the issue. That's the deal with contracts, with options. They can go to zero. And so I've been learning some hard lessons with that. But at the same time, I'm learning those lessons and I'm trying to be better with my trades. And that's kind of why I wanted to go over that stuff in this video. So with all that being said, I might bring Ed back. And I might throw this up here because I don't know that anybody's still really tuning in or has any requests. But, you know, as always, those are just my thoughts. If you found them helpful, make sure you like the video. Make sure you subscribe to the channel and share your thoughts in the comments down below. And so, yeah, I've been streaming for about 2 hours and 20 minutes. So I'm going to wind this down, close this down. And I will be doing an overnight market prep tomorrow evening at 10 p.m. Eastern. May take some requests, but will have work the following day. So probably won't be up too late for that. But anyways, this has been fun. Hopefully it was helpful for you. Definitely gave me some perspective, you know, that I'm really not too bullish on any additional contracts other than just being really excited, bullish about Peloton, being excited, bullish about Oklo. Not specific contracts here. I'm just clicking on what I see over here. And then GameStop as well. Feeling really good about them. And then also BigBear AI. So those are probably going to be the top 4. BigBear AI, GameStop, Oklo, and Peloton. Excited about those as far as the options data goes. But yeah, I hope you guys have a great rest of your Sunday. If it is still Sunday for you, I've got 1 minute before it becomes Monday for me. And yeah, I'll see you guys tomorrow evening. Hopefully you have a great Memorial Day barbecue. Enjoy some company, some beers. And yeah,